Well, good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and here we are now on Wednesday, and this is the 3rd of March, 2021, 6:15 p.m. If you were like me, I did watch today on CNN the hearings about what went on the Capitol Hill intrusion, let's call it that, when the rioters broke in. Well, tomorrow, I don't know if you're aware of it yet, the House of Representatives has already said they will not meet. There's another threat that another intrusion may happen. I haven't heard anything about the 7, but what a sad day of events for America. We can't defend our capital. We have to close it down because there are threats on it. There's something not right here. And those people that we have defending us, something should be said about it. And if you watch the hearing, you do realize it's typical government. Hey, Bob, you got to call over to get that done. Okay, I'm doing it, and I'm calling there, I'm calling there. So 35 minutes later, they're already rioting. What do you think we should do? Well, maybe we should send a busload of the National Guard there. The soldiers did nothing wrong. The National Guard did nothing wrong. The police did nothing wrong. Again, the people in control of them did a lot wrong. Okay, so as we take a look at the markets, why are we down? You're in a transition phase. I'm so tired of saying it, but I gotta keep saying it because that's where you're at. You're in the point where interest rates are creeping higher, inflation expectations are soaring. I didn't say inflation is. Expectations are soaring. Economic data has been good. We know that there's jobs data that look terrible today in the ADP data, and they might look, maybe that's what they're gonna look like as we get to the jobless data on Friday. So what? You're going to say, boy, that's crude. No, it isn't. Your COVID vaccines are flying out the door. Johnson & Johnson's will be in people's arms tomorrow. All the others, they're setting up tents, they're moving. The president says by May, everybody that wants a shot will get it. Now the teachers are going to the front of the line. There's a lot of positive going on. The problem isn't that. The problem is the market's in a post-transition of COVID. It's already saying, you know, I'm looking at this and the economy is going to get better, and with it, interest rates are going up. How are we going to do on our earnings when there's actually going to be a cost to money that there hasn't been? And that's where the market's got it wrong. The cost of money is still relatively near nothing. That's where it's wrong. So you took an interest rate from 0.6, which is ludicrous in a 10-year, to 1.5, 1.4 now, right in that range. So what? If inflation is running, as most of us think it is, over 2%, it's still a negative. I don't know. Markets have to digest things. That's where we're at. Okay, enough of that. Let's go to the charts. Now, I've got a favor to ask. If you watch this and you're a religious watcher, and there's plenty of you, at least hit the subscribe button and/or that you like these. That'll keep them going for you. If I don't get that, why am I doing them? So do that. That helps me with the algorithms. It gets our ads to get more people to watch this placed on more sites. Join me with that, and I'm the happiest camper. Okay. So as we do this, we're looking on the weekly area chart of closes. What do we have? We have bias that's up. Yeah, the market's down 0.7 going into we're in Thursday's close, so it's basically unchanged on the week. When we take a look here, as the market in the past few days was coming up, not the break now, I kept telling you, this is a strong resistance point. And now the market has done this. Okay, what's the trend of the market? The trend of this market is down, not up. Short-term trend. You've got lower highs, lower lows. What's the definition of a downtrend? That's it. What number do you have to take out to break it? You got to take out 39.12, the most recent high. Where's the balance in the market? Well, let's put some moving averages on. This was the balance, the 18-day average. Markets fight at 18-day averages often as they try to figure out what next to do. So this market had gone up, pulled back here, fought a battle, coming down. Trend down, bias down. Where's the first support in the market? It's a combination, first, of a Bollinger Band. It's in front, in this case, of the 100-day average. They don't have to be lined up that way. The 100-day could be in front of it. It all depends. This is a lagging indicator, so it's where the market had been. This is not a lagging indicator. This moves with the market as the market is moving. So you're in a support zone, in a downtrend, and momentum is oversold. That's simple. Do I think you're attracting new selling? No. Do I think you attracted selling up here? I'll back you off to it. Absolutely. Why wouldn't you? Why wouldn't the pros sell it there? I mean, it's always a question of dollar risk, but the chart pattern's bearish. You'd have to get over 39.12, and if you went short there, you already had lower highs, lower lows. This is March 2nd. Today's the 3rd. The cover zone, I would assume, is the lower Bollinger Band if it gets down there. You tell me what it did, and this is where you're at tonight. In the NASDAQ, is it any different? No. Come on. Here's where you were yesterday. Lower highs, lower lows. You went up. You haven't been able to get to that number. So I don't know that the pros sold this or not because there was no moving average there. There's another moving average I do use. I never show it here. I show it only for my paid subscribers, and it's there on every video I do for them. And there would have been some resistance in that area. Target again, if it drops. I don't know that it's going to drop or not, is here. What would have broken the downtrend? Well, if we come back right here to this day, 13,350, On this rally, you got to 13,318. You didn't get through that. And here's the market pulling back on you right away. I'm going to look for the 18-day average as the possibility, and that's what you did. Now that, with the combination of the 100 and an oversold condition, whether the market's going to collapse or not, I think the pros are really lightening up on their short positions here in a big manner. I am not saying they're going bullish. I think they're lightening up. What about the Dow? Well, the Dow has been stronger. It's a whole different world on this Dow. First of all, it's narrowed in these Bollinger Bands. As we come to these others, look at how far apart they are. That one's at least a little narrower, but the Dow is super narrow. The Dow hasn't been able to reach up to here. It's got its downtrend. Let's assume it breaks. I think that's the assumption you have to go with because the trend is down, the bias is down. If it does, the 3102 level is probably, that's what I would be teaching in a big room. That's where I think the pros would cover their shorts. What number would bail out the bears? I think if you took out today's high, because it's an outside day down, that's 31,609. I think the market would be a candidate to go up from there about 170, 180 points to the upper Bollinger Band. Doesn't mean I'm right on it, but that's what I would think the market could do. So we'll see where you go. In the Russell, what do you do the first time you hit a lower Bollinger Band? You tell me. That's where, if one is short, that's where I think they're covering their shorts. Tell me about the VIX. Where do you think the VIX was going to find support? We have been talking about it. You've had the pattern of higher lows, higher highs. The market came down and did what it had to at the neighborhood of the 100-day average. If it continues, and I don't know if it will or won't, I'm going to look for support against that average, and you break the uptrend if you take out 2131. Momentum turned, but didn't turn down. It just flattened itself. This is what you looked like as of Tuesday, all right? This is today. So, trend still up. I expect the market to have a very difficult time if it can even reach up to the Bollinger Band and run through it. If it were open right now, it'd probably be at that number given where the stock indices are. Bonds and notes, very oversold and not embedded. So it's a downtrend that has walked away from the ride down. This was the easier money. Now it gets very difficult in it. When you walk away from the Bollinger Band, it's not a sign of bullishness. Now the market's digesting what it did and it's not embedded. I'm very cautious. What else happened? You lost the embedded reading here. Watch this. You ready for it? Right there. Prior to that, the numbers were going sideways. Normally when that occurs, unless you go back under the most recent low, I look for price in the 18-day average to make a run at each other. Now, if you watched my copper analysis in the metals video, this is similar. What's happened since that has occurred is instead of the price rallying sharply, it's gone sideways. It's waiting for the 18-day average to come to it. Since it lost the embedded reading right here, that day was right there, the one that I wanted. The market was at 159.7, right? So if you lost it, this number would have been 163.11. Now watch what this is doing as it's marking time. This market is falling apart as it's waiting for it. It's already given up a chunk. To get to that number won't be that difficult is my point. Do I think there's bears or aggressive here? I do not. In the 10-year note, same play as we just went through. Each day that falls, it gets closer to it until you take out that low. As a chartist, I'm looking to see if this market doesn't get back there. That's how I'm looking at it. 2 oversold, 2 also on the short side. Dollar index, lower Bollinger Band to upper band. You ran into brick walls both ways, and you're just frustrating traders. You're not getting a setup to be long or short. You're hitting these numbers and popping very dramatically, probably churning a lot of people up. In the eurocurrency, you're back to the 100-day average. Last time we were here, found support as it probed through, couldn't stay under the combination of the Bollinger Band and that. Are we trending? No. You got a higher high, lower low. I don't know what to do with it. How's that for a frank answer? British pound. So in the pound now, it's the 18-day average that is the battleground. Are we trending? No. Just look at your arrows. Lower low, higher high. Momentum coming down, you fell back. It's a rebuild. This market went, let's not lose sight of this, from this 135.5 area up to 142.5. Now it's giving back a part of that. Nothing wrong with that. Market has to rebuild. It also got a new budget today coming out of the UK. If you saw, they're going to raise their corporate taxes from 19% to 25%. By 2023. That still puts them under other parts of the EU, but they got to find ways to pay for all the COVID relief. They're trying to get that done, and they're taking away some personal allowances. So you get that little change. Got to wait and see how it plays out. Bitcoin starting to consolidate the game. Not acting bearish, just consolidating. It's not trending. It's got a lower low and a higher high. You see that? This is the number it probably fights against at 18 as it's trying to bring the Bollinger Bands in again. Then I go to the oil. Now, today as I looked at it, I'm watching what I knew the ministers would start talking. If you get my written update, I've been telling you this since Sunday night. And of course they did it. They came out, 3 of them today. We don't know that there'll be any rollback at all to where we put more oil on the market for April. Maybe we'll just keep the cuts as they are. That seems to be the thought. Well, of course, that's bullish right away because the market's building in. There's going to be between 500,000 and 1.5 million barrels coming out of this meeting. So what did they do? They kicked it up. And tonight, the market backing off from there. The OPEC meeting is tomorrow. I'm going to ask you a question. Why go through it? The chart action does not know what they're going to do. I think you have to be patient. Going home, unless you take out the lows of Wednesday of 62.34, the bulls still have control of the market. It has done what it had to. You had an embedded reading, you lost it, you went to the 18-day average as I teach, and that's it. Again, I'm going to repeat to you, if you haven't taken our charting course, this is what you learn in it, the reasons why this happens. At least my interpretation as to why it happens. Doesn't mean I'm right, okay? When I look at gasoline, I've gotten rid of heating oil. I'm now moving into the gasoline family. Why am I doing that? Well, gee, it's going to be 65 in Chicago next week. I think people are going to start driving like mad. I think people are coming out of this winter, they've had it. And you're not going to need as much heating oil in 65-degree weather. So I look at that. So I want to just change it. I don't put up every chart here. All the charts are in my morning subscriber video. And this is still bullish. Lose that embedded reading. And you're flirting with it tonight. Be careful. You know what I told you in the morning subscriber video. I won't back off that. That's not for these people that don't pay us for that. When we take a look at the nat gas, you just made a lower low. This market threw out a new bear signal tonight. Lower highs, lower lows. Until you take out 291.60, the bears gained control again. Get back over that number and close over 289.50, the bulls would grab control. But right now, I think the bears grabbed it. Maybe they're looking at these combination of the 100-day average and the lower Bollinger Band as a target. Again, in the morning, 5:30, 5:40 in the morning, I start recording. Now, to make the recording, I get up a lot earlier than that, and I'm reading the news from Asia to Europe, back here. I write down the headlines. Those headlines appear in my morning video. I'm giving you what's happened. Often I'm talking what happened in Europe, Asia, and here, but I'm certainly going to always prepare you for the upcoming U.S. reports. I'm going to cover short-term analysis, swing trades. Those are not day trades. That's day to day. I don't believe in day trading. If a trade happens to work out, that's great. Now, workout could be you went long, you got stopped out with the loss. That's still a workout. It could be you went long and you took a profit. That's a workout. And flip it for the sell side. The goal is not, I'm going to buy and sell and be out of the market flat today. No. Whatever a day-to-day works out to, sometimes that becomes your longer-term trade. And I do on Saturdays do only weekly charts for you. So now you got big picture. You've got where to buy and sell on the longer picture. The risks are a bit bigger, but the chart action's very similar. You can view my videos and my subscription if you do it on any of these. We provide you with a, for your iPhone, a iOS and an Android system. I cover it each time in this exact way. You get used to it. You can pull, you can scroll. If you're on our website, it'll tell you you're in metals, it'll tell you you're in interest rates, tell you right where you're at, and what's the cost. Well, I know coffee, you're going back to it. $7.95 isn't out of the realm with a tip for one of the big coffees, right? 30 days, 26 videos out of the 30 days you get. I think it's a heck of a lot. Why not give it a try? Go to our website under the word research. That's how you do it, or call my staff. I'm Ira Epstein. Sorry that I keep pitching that, but that's what makes you get this free here. I'm Ira. You take care.